So what is up YouTube? In today's video, I'm going to be talking about one of the most volatile stocks in the stock market, and they've been on Robinhood's top movers for the past 2 months on a consistent basis. So the stock I'm talking about is Wins Finance, and I'm going to be analyzing it and talking about whether it's a buy or not. Now before I start, I know how last week I made a video talking about how I'm buying Tortoise Acquisition Corp because it's merging with Hyliion, and the stock has rallied around 80% since then. But I just want to tell you guys that I'm not selling just yet, and I will be doing an update and full stock analysis on it soon. So without wasting any more time, let's start analyzing Wins Finance. So first we're going to be talking about how they make their money or what their business model is. So Wins Finance is based in China, and it provides financing solutions for small and medium enterprises, and it also offers financial guarantees as well as financial leasing, advisory, and consultancy. So based on the name alone, we could tell that Wins Finance is in the finance industry, and it's basically an asset management company. So people give them money and they manage their assets, and they also provide financing solutions to smaller businesses. So Wins Finance is currently trading under the ticker symbol WINS. They are a small cap stock with their market cap being $687 million. Now this is a lot, but compared to other companies on the market, this is very small. The P ratio is 160 and the earnings per share is 0.22, and they do not pay a dividend. Now let's talk about Wins Finance revenue and earnings. So in 2015, they reported $31 million in revenue and $25 million in earnings. However, they have taken a huge dip over the years. Like in 2017, the revenue was $23 million and their earnings was around the same. And in 2018, the revenue actually went up, but their earnings were down. So in 2018, the revenue was $23 million and their earnings were about $11 million. So now let's talk about their PE ratio again. So their PE ratio is 160, which is extremely high for the industry. And not only that, companies with PE ratios this high are growing at a really fast rate, like a 20, 30, or even 40+% rate. And these type of companies are companies like Amazon and Shopify. However, when it comes to Wins Finance, it's trading at such a high valuation, even though it hasn't grown since 2015. However, P ratio isn't the only metric you should be looking at, and that's where a lot of analysis go wrong. Now we'll be looking at a few other metrics and decide whether it's a buy or not. So now let's talk briefly about their balance sheet. So right now the total assets are $309 million and the total liabilities are $34 million. Now total assets minus total liabilities give us stockholder equity, and their stockholder equity is $274 million. Now with stockholder equity, we could calculate the price to book ratio, which is around 2.75, which gives us a book value per share of $13.76. So just by looking at the PE ratio and PB ratio, it looks like this company is extremely overvalued, but we're going to look at its future and decide whether the valuation actually makes sense. So obviously Wins Finance is in the finance sector and they manage assets, and it's extremely hard to grow in this industry because there's just so much competition and it's hard for one customer to go to another. So personally, I do not think this valuation makes sense at all, because having a PE multiplier of 160 means you're growing at a 30+% rate or 20+% rate like Amazon. However, if you look at Wins Finance, they've actually dropped off a lot since 2015. So now let me conclude. So personally, I'm going to be staying away from Wins Finance because I think their valuation is insane, and there's just so much competition in China in this industry. And not only that, there are a lot better valued stocks in the finance industry either in America or China. And also, Wins Finance got a non-compliance letter from NASDAQ because they weren't able to report the 2019 earnings report on time. And not only that, there's just not enough information on this company, and that's why I don't want to invest in it. So if you guys enjoyed this video, consider leaving a like and subscribing. Also comment down below your thoughts on Wins Finance and other companies you would like me to analyze. And thank you.